Hello everyone and welcome to today's ICAS webinar on the Scottish Land and Buildings Transaction Tax 3-year lease reviews with our guest speakers from Revenue Scotland. Increasingly, accountants are finding themselves having to advise clients on LBTT and provide education and understanding around the 3-yearly review process, something which was typically the domain of property lawyers. So whether you're managing your own transactions or advising clients, a clear understanding of the lease review process is crucial for ensuring compliance and providing effective and informed guidance. Now, the observant amongst you will note that I am not Justine Rickmany. I am in fact Jeremy Clark, the Assistant Director of Practice at ICAS. Unfortunately, Justine, who's our Head of Employment and Devolved Taxes, can't join us this morning, which is a great shame for two reasons. First of all, Justine's our resident expert on all things to do with devolved taxes, and this was going to be her last webinar as she's leaving ICAS at the end of June after the best part of 9 years to work part-time for Tollies. So who knows, maybe the next time you're catching up on your technical reading, it might have been written by her. The second reason is that you could write what I know about LBTT literally on the back of a postage stamp and you probably wouldn't fill it. So unfortunately, or so fortunately, I'm joined today with three people who know a great deal more about it than I do. So today we have Jane Fielding, Molly Johnson and Adam Vigas from, I hope you got your name right, Adam, from Revenue Scotland, who will be taking us through the detail of what accountants and tax professionals need to understand and be aware of when it comes to 3-year lease reviews under the current legislative provisions. Before we begin, just a few housekeeping matters as usual to remind you of. You can submit questions at any time through the Q&A facility, which can be accessed at the top of your screen. Questions can be submitted anonymously, and we'll be saving all your questions until the end of the webinar for the live Q&A session. Please also join the conversation today through the chat box accessed at the top of your screen. This allows you to comment or discuss with fellow attendees on matters covered by the webinar. We are, of course, recording it and we'll make it available for on-demand viewing afterwards in case you want to refer back to it or share it with others. And the slides will be available on the events page on the ICAS website under the events listing. We look forward to receiving your questions throughout the course of the webinar, and of course we'll try and get through as many of those as possible at the end. But let's just get straight into the detail of it. Over to you, Molly, Jane and Adam. I think Molly's up first.
Thanks, Jeremy. Yes, I'm up first. So good morning, everybody. I'm Molly Johnson. I'm Head of Business Development here at Revenue Scotland. And before we jump into the meat of the matter today, I'm going to talk to you a little bit about who we are in Revenue Scotland. So we are Revenue Scotland. We are a product of devolution following the Kelman and Smith Commissions, which devolved revenue raising powers via taxation to the Scottish Parliament. We are Scotland's national tax authority with responsibility for the collection and management of wholly devolved taxes. So at present, that is Land and Buildings Transaction Tax and Scottish Landfill Tax, both of which came into effect on the 1st of April 2015, replacing their UK equivalents. And everything that we raise goes straight to the Scottish Consolidated Fund to fund public services in Scotland. So as well as LBTT and SLFT, we also have the Scottish Aggregates Tax on the way, which is due to go live in April next year, and the Scottish Building Safety Levy, for which the bill was introduced earlier this month, which you may have seen. So we are independent from government. We are set up as a non-ministerial office. And that happened on the 1st of January 2015. So that means that we're accountable through our board directly to Scottish Parliament. There's around 100 staff in the organisation covering 9 different professions. So lots going on and lots of small teams covering different specialisms within our relatively small workforce. We are a digitally enabled organisation starting from scratch with new digital systems which have already been renewed in the 10 years since we've been in operation. And we are high performing with strong performance against our KPIs with a motivated and engaged professional workforce. So we are required to produce a corporate plan every 3 years, and when you get access to the slides, that will take you through the link on the screen to the corporate plan. This is a strategic plan which is approved by ministers and laid before Parliament every 3 years, and we're held to account for the delivery of this via an annual audit that takes place by Audit Scotland. So that's a very quick run through of who Revenue Scotland are at a glance, but this talk focuses on leases, which sits within the Land and Buildings Transaction Tax regime.
Molly, can I just butt in and ask a wee question there? If you're a non-ministerial office, what's your working relationship like with the Scottish Government itself?
So although we're a non-ministerial office, we have statutory functions that's laid out in our Revenue Scotland and Tax Powers Act, and one of our statutory functions is still to provide information, advice and assistance to Scottish ministers relating to tax. So we still have to have a strong working relationship with Scottish Government, with ministers, and working closely with them on policy matters. For instance, the introduction of aggregates, the bill that I spoke about that's just come into Parliament on Scottish Building Safety Levy. So we have a very strong working relationship with them. It's just that we are held accountable to the Scottish Parliament rather than by the ministers. So before I pass across to Adam, we're going to start with a quick question for us to gauge your level of understanding of leases. So I'm just going to move on to the poll question here. So hopefully that's popped up on your screen. So the question is, how would you rate your current understanding of the LBTT lease review regime? So there's 5 stars on the screen. So 1 to 5, if you could rate yourselves, 1 being not at all familiar and 5 being very confident in your understanding of the regime. Okay, I'm just trying to see how I can actually see the results coming through.
So if you can't see and it helps, we've got about half the people voted so far. Very firmly down at the bottom end, we've got about 34% on 1 star, 28% on 2 stars, 20% now, it's moving all the time, on 3 stars. Up at the other end with 5 stars, we've got about 6%, which is probably about 3 people.
Okay, right. So that's why we're doing this presentation today. So Absolutely. I can see that we're sitting at 2.3 as the average, which is pretty much in the middle, close to it anyway. So that's good for us to know. And when we finish the presentation later, we'll be asking you the same question, and hopefully we'll see an increase from the 2.3. Right, well, I will pass across to Adam now.
So thanks, Molly. Yeah, I'm Adam Vargas. I'm currently a tax specialist within the lease improvement project team, but I've been at Revenue Scotland for over 8 years across multiple teams. So firstly, we're just going to go on to what LBTT is. So LBTT is Land and Buildings Transaction Tax. It's the Scottish equivalent of stamp duty land tax down in England and land transaction tax down in Wales. It's a self-assessed tax, and by that we mean that it's the taxpayer's responsibility to submit an accurate return and to pay any tax due when the return is submitted to us. And it's also the taxpayer's responsibility to be aware of any future or ongoing obligations. Now, LBTT can apply to residential and non-residential conveyance and purchases, but it only applies to commercial leases, and it's the leases section that we're going to be concentrating on today. So firstly, when do you need to submit a lease return to us? So all 3 tax regimes in the UK have very similar criteria for when an original lease return needs to be submitted, but they do differ within the tax rates and bands. So currently in Scotland, if a lease is for a period of 7 years or more and the relevant rent, that is the average annual rent, is above £1,000 or more, or the chargeable consideration other than rent, which is also known as a premium that's paid to the landlord, is over £40,000, then we will need a return. This does mean that there is some circumstances where a return is needed where there's no actual tax due. Also, we need a return if the lease is for less than 7 years, but tax is payable. So currently that means if the net present value, which is an accumulation of all of the yearly rent values, is above £150,000, there'll be tax due. Or if there is a premium, so a lump sum paid to the landlord, if that is above £150,000, then there will be tax due as well. It is important to note that if the relevant rent is above £1,000 and there is a premium, then the premium will be taxed. There is no nil rate band. If that relevant rent is above £1,000, the premium will be taxed at the lowest tax rate band. Okay. So now we'll go on to the fundamental difference with LBTT compared to its UK counterparts, and that is that there is a need to submit further returns under LBTT under certain circumstances. So the 3 different circumstances that we will require a new return is if the lease is assigned or given to someone else, then the outgoing tenant needs to submit a return to us that lets us know who the new tenant is. And then it is the new tenant's responsibility to submit any future returns or any further returns after the assignation's happened. We also require a further return if the lease is terminated or ended. This is even if it ends at its natural end date, or if the lease ends early, we need a termination return that helps us remove it from any 3-yearly review cycle. And then the main difference is that every 3rd anniversary of the effective date, we need a further return. So that's normally the 3rd anniversary of the start of the lease, and these are known as 3-yearly reviews. And this is mainly where we're gonna focus. So all further returns needed to be submitted to Revenue Scotland within 30 days of the event that triggers that return happening. So basically, we need 3-year reviews to update us on the lease. So if the lease has been extended or the rent's changed, this will be told to us in that 3-yearly review. So additional tax can be due, but also if the rent or the term has decreased, then there can be a refund due to the taxpayer. But again, it's important to note that even if there's been no changes to the lease, we still require a 3-year review to be submitted to us. So just to give you a couple of stats with regarding 3-year lease reviews, in the current tax year, 25-26, we're expecting just over 10,000 review returns that are due. And as of 2027, some taxpayers will be submitting their 4th 3-yearly review. Basically, it's going to be the 12th year anniversary of their lease starting.
So, Adam, can I ask what the most common mistakes or misconceptions that tenants or agents make when it comes to lease returns?
Yeah, of course. So there's a couple for tenants. Main 2, basically, tenants seem to believe that if there was no tax paid on an original return, then there is no need for them to do any further returns. So they seem surprised when we start getting in touch with them, expecting to see 3-year reviews if they didn't pay any tax on the original return. Also, there are some tenants that believe that when they submit a 3-year return that they need to pay the tax again, and they end up paying a duplicate payment of tax that they already paid us against the original return. With agents, it's slightly different. The main misconception with agents is they seem to believe that an original lease return has to be submitted to Revenue Scotland for the lease to be registered in the Book of Council and Sessions. Now, that's important with regards to non-domestic rates, but basically it causes issues because when an agent tries to submit a return that we see as non-notifiable, they will be warned of that on our system, but they can still force that through. And if they do, it then brings their client into the 3-year review cycle, which obviously we don't want to do if they don't need to. So now I'm just going to move on to submission methods. So how lease returns and further returns are submitted to Revenue Scotland. So the original returns are predominantly submitted by agents as part of the service that they provide to negotiate and draw up the lease. and currently close to 99% of original lease returns are submitted by agents. Currently, taxpayers can submit their own original lease return, but this is normally only under exceptional circumstances, and at the moment they would need to use a paper return to do that, but it is something that is being looked at for the future. Further returns though, so that's assignation, termination and 3 yearly review returns, can be submitted by both agents and taxpayers. So again, with current figures, it shows that around 2/3 of 3 yearly reviews are still submitted by agents at the moment. And to do that, they use the Scottish electronic tax system. This requires them as a company to register with us, and they can then give individual agents access to submit returns. So having access to sets also means that they can submit any type of return. So that includes original leases and conveyances. It also gives them access to any previous returns that they've submitted, and it can give them access to our secure messaging service so that they can get in touch with Revenue Scotland directly, and any messages can be attached directly to tax returns. For taxpayers, or for the majority of taxpayers, it is slightly different. They can use our unauthenticated portal via the Revenue Scotland website. So this gives them one-time access where they get around 90 minutes to complete a review return themselves. So they can only use this for assignation, termination and 3 yearly review returns. To do that, they will need some information from the original return, such as the RS number, the effective date and the landlord name. But again, it's something that we are looking at in the future to whether we can expand that access. Some taxpayers we have already started opening up to, so some larger companies now have access to sets as long as they are submitting multiple returns throughout the year. So these are some companies that have a lot of leases on our system.
So Adam, can accountants get access to the set system now, or is that coming down the line?
So accountants would class as come under the agent bracket. So basically, if you're working on behalf of clients and you need to submit their tax returns, then you will be able to have access to sets. So I think my colleague Ultra has popped a link in the chat there with a bit more information. But basically, at the moment, there are some restrictions. So we only tend to want people who are going to be able to do multiple returns. So if you only have maybe one client that you're working with and you will only need to submit one return, then if you try and sign up to sets, you will probably have that rejected. So I think at the moment, we say that if you're likely to submit in the near future around 10 returns, then we will give you access to sets and we'll give that. But it is something that is reviewed quite often. And as I've said, we are trying at the moment to open up sets a little bit to give taxpayers a bit more access to sets and to previous returns that they've had submitted.
Brilliant, thanks.
So my last slide, we're just going to go on to what support that we currently provide to taxpayers. So at the moment, we send out multiple reminder notices to taxpayers prior to their review return being due. So this is a courtesy reminder. We don't have a statutory obligation to do so. It still is ultimately the taxpayer's responsibility to submit correct returns when they're needed. So at the moment, we send an initial reminder notice to the correspondence address. This is normally around 8 weeks prior to the latest filing date the review return is needed by. And it contains all of the taxpayer information that they will need to be able to submit a return themselves. So the effective date, the RS number, etc. We then send what we call an occupier reminder notice to the leased property address. So it's called an occupier notice because it's addressed to the occupier and it contains no taxpayer information, just in case the tenant has moved on and forgot to tell us and it gets into the hands of someone else. This is normally sent out around 6 weeks prior to the filing date. Within the last year, we've also started to send out a taxpayer email. This goes to the email address given on the latest filed return that we have for that tenant, and it includes the link that they would need to go and submit a further review return. And not mentioned on the slide, but very recently, within the last few months, if the previous return was submitted by an agent, we do then also send them an SMS, so a secure message, just to remind them that a client that they previously submitted a return for is now due to submit a further return, and if they can get that sorted. And that's all the slides from me. So I'm now going to pass on to Jane so that she can just discuss a little bit more about what we do in the lease improvement team.
Thanks, Adam. Okay, morning everyone. So my name is Jane Fielding. I am the lease improvement team and project manager, Revenue Scotland. I've been Revenue Scotland now for just about 10 months, so relatively newer than Adam and Molly. Prior to that, I was with HMRC, so still working in taxis. And so I'm just going to talk a wee bit about the lease improvement project and some of the work that we've been doing in the project. So this was set up and we have a strategic plan for the project running to 2027. Now there's two main goals of the project, and the first being to increase our on-time 3-yearly return submission rates. We are looking to try and increase the compliance, and that's through changing taxpayer behaviour and have them being more compliant with the regime. The second goal of the project is to gather and build the evidence to support legislative change that we are looking at and proposing, and Molly will talk a wee bit more about that later. So we have 4 key strands for the project. So the first strand we have is our communications and engagement. So the focus here is all about improving return rates, and it's about targeting taxpayers and key stakeholders who have an interest in commercial leases. So this is all about raising awareness to support the taxpayers to meet their tax obligations with regard to returns and more importantly, the 3-yearly returns that have to be done. We have a data strand, and we use data to gather that evidence to drive our engagement activity. It determines who we target, which taxpayers, which stakeholders, and what our approach is to our engagement. And again, this is all about increasing our return rates, about making it easier for the taxpayer. We also use this data to measure the success of any activities and work that we're doing, and also so the success ultimately of the project. We have a strand for digital enhancements, and this is all looking at increasing automation, making it easier for the taxpayer, enhancing that experience, streamlining our processes within Revenue Scotland as well. And the last strand that we have is our legislative change. So we have an LBTT review, and the project aim is to gather that evidence to support any potential legislative change that might come in. So that's the strands for the project. What I'm going to do now is talk a wee bit about some of the work that we've been doing and who we've been working with. So you can see some of the organisations on there that we are actually actively working with in Revenue Scotland. We can't do this on our own. We need that support with different key stakeholders. So we obviously primarily work with agents and the taxpayer groups. So we've been having conversations and meetings with agents and taxpayers, and that's to get an understanding of their experience. So to gain that user experience, get an insight into any sort of barriers, any challenges that they may encounter, and also to raise that awareness level of their obligations. So ultimately, we want to make sure people know what their ongoing tax obligations are and that they're complying with it. We obviously work as well with wider key stakeholders, so industry bodies, government stakeholders like yourselves. That's why we're doing things like webinars. It's to raise that awareness. We have a huge challenge to reach our taxpayers and trying to get that information out there. And I think, as Adam said, it is a self-assessed tax, but We want to be able to support the taxpayers. We want to make sure they're meeting their obligations, because there is penalties that that kick in if they don't do the returns on time, if they don't pay the payments on time. So what we want to do is make sure we make this as easy as possible for the taxpayers, get that message out there, and that's why we need key stakeholders like yourselves to help us reach the taxpayers. We are currently in the process of signing up with Fine Business Support, which is an excellent sort of signposting service for public services for the taxpayers. So again, it will give that link to our guidance and that support as well. So that's one of the ways that we're trying to reach people. We launched our first social media advertising campaign. So this was a small 8-week targeted campaign at small businesses. So again, a lot of the small high street businesses possibly don't know a lot of the ongoing obligations. So that was a really successful campaign for it being a small one. We reached about just shy of 800,000 taxpayers. So for an initial campaign, that was a real success for us. So that's just one of the different kind of innovative ways that we've been trying to kind of get word out there. We've developed some new awareness leaflets, and these are in both digital and in paper form, so they can be a proper leaflet, and that's something we can share with wider stakeholders as well. So again, it's another way it gives that information, links to the guidance. Through some of the insight and feedback that we've been gathering, we have reviewed and made improvements to our guidance on the Revenue Scotland website, and the new website was launched just in April this year. So again, that we use the feedback and the insight we've been gathering to shape what we put on and how that new website looked. We are also in the middle of creating some new YouTube videos. So we find that the videos are a good way of getting that education out there. There'll be short, sharp videos that'll just give that overview of what the ongoing process is and what people need to do for their tax obligations for 3-yearly lease reviews. So that's something that we're looking to get launched in the imminent future. And all of this is to support the taxpayers, it's to support them meet the obligation, it's to raise that awareness. We are very small in comparison to HMRC. A lot of people don't know who Revenue Scotland are, and we get a lot of people saying, if I'd known about it, I would have done the return. So again, it's just getting that word out there, help getting other stakeholders to kind of spread the word for us. We work very closely with Scottish Government, with the local authorities as well. So a huge challenge for us, I say, is getting to taxpayers, but it's something we're working through with all of our engagement, any innovative ways to do it. So that's just a wee bit of a flavour of what we've been doing with the project and trying to improve our rates and improve the journey basically for taxpayers as well.
Jane, could I maybe ask what the highlights are, and like what are the sort of main insights that you've gained so far from the lease improvement project?
Yeah, of course you can. Probably one of the things that jumped out to us was the larger organisations. So we had meetings and conversations with some of the huge organisations across the UK, really just to get their insight into any sort of barriers, what their understanding was. And a lot of the things that they came out was that the differences, and that they were unaware of the difference between stamp duty, obviously, across the UK and an LBTT. And a lot of that is because they have a legal or a tax team who's based in England and might have just a very small amount of leases in Scotland, whereas they've got the vast majority of them across the rest of the UK. So that's where a lot of the misunderstanding comes, and that's why the returns are not submitted, because they don't have that knowledge of the difference between Scotland and as I say, across the rest of the UK. So that kind of jumped out to us. We thought they may have whole systems in place, but having the conversations with them was great insight for us, but also for them, and giving that kind of support. Some of the other stuff we've done is we did some sort of usability tests ourselves. We mapped out the user process and the journey just to see if there was any sort of pain points that we could identify. And that highlighted us a sort of need for that very simple kind of support for the people who don't have that tax knowledge or that legal expertise. So it was making it clear, non-legislative guidance. So a lot of the guidance that was there was links to legal text on our system. So it's highlighted to us that we needed to make it easier for the taxpayers to understand it, for people who don't have that background, someone with a small business who doesn't have that background in either tax or legal. But I think just in general, it was that lack of awareness of the 3-yearly regime. And that's what has came out very strongly. It's people are just not aware. A lot of people will have their initial return done by an agent and then don't realise that 3 years down the line that they've got to then submit. So that's came across very strongly, and a lot of that insight that we've been getting, and just that general awareness of who we are as well. So yeah, so that's why we've been doing a lot of the work that we're doing on the project.
Thanks very much. It's pretty fundamental, like.
Yeah. Thanks. Okay. So I am now going to pass it on to Molly, who's going to talk a wee bit about our future developments for LBTT.
Thanks, Jane. So you've heard about all of the work that's going into getting people to understand the current regime and how to file their return on time and get it right. There are some things happening in the legislative space that Jane spoke about as one of the strands of the lease improvement project that I just wanted to speak with you about today. So as part of the tax strategy that was published in December last year, the Scottish Government announced that they will conduct over the remainder of this Parliament a review of LBTT, and that will support an evaluation of key aspects of the tax legislation. So the review has started, and it seeks to evaluate whether aspects of the legislation achieves their original policy intent and whether it remains appropriate within the current context and having had 10 years of operating the legislation. And leases form part of the LBTT review. So the review will focus on identifying areas which might require further consideration or legislative amendment in the next Scottish Parliament. So it's quite important just to stress that the review is intended to support an evaluation of key aspects, but any changes will be made in the next Scottish Parliament and no direct legislative changes will come in before May next year. But as I mentioned, leases are included in the LBTT review. So the 3-yearly review process is in there, as well as the lease notification threshold, which Adam spoke you through earlier. Also looking at how penalties apply to leases. And then there's a whole other raft of changes being looked at in the wider sort of conveyances space of land and buildings transaction tax as well. So in relation to the leases part of the review, we've been working closely with SG policy officials to agree a delivery plan for the remainder of the financial year. And a working group is due to be set up shortly, which will consider the leases work in more detail. And there are 3 strands to the LBTT review. And strand 2 is where the leases regime is to be considered. And that means that within strand 2, although it will be led by Scottish Government and Revenue Scotland officials, there will be input from key tax, legal and accountancy stakeholders and representative bodies so that we can really make sure that we're speaking to a wide breadth of stakeholders and hopefully taxpayers and agents as well, who can give us their views on how they feel that the leases regime works in practice. So there's a lot happening in this space. And then we also internally within Revenue Scotland, we look at the set system, which you've already heard about today. So we look at making improvements continuously to this system to help support taxpayers and agents. So we regularly review whether current guidance and services continue to meet the evolving needs of our users. And this financial year, we've identified a series of planned enhancements that will take place. A key area of focus is how we communicate further obligations from the moment that a lease is entered into. And that is the 3-yearly review process. So getting people to understand that there is that ongoing obligation that isn't present in other areas of the UK. And to support clearer understanding, we've introduced additional guidance in plain English to our set system itself. And we're looking at a broader look at our communication channels. So Jane's already spoken a little bit about the communications and engagement strand of the Leases Improvement Project, and research shows a strong preference for digital communication. So we're working to enhance our digital outputs, making greater use of electronic formats to ensure that messages are clear, timely, and accessible as well. We're also introducing additional validation measures to support users through the self-assessed tax process. And while responsibility lies with the user, our goal is still, of course, as the tax authority, to help them get it right the first time. So by guiding them to provide accurate and complete information from the outset.
Molly, can I just ask how we can get involved in this work and give our views and sort of,
Yeah, of course. So for the LBTT review, as I mentioned earlier, the leases regime fits into strand 2, where a working group will be set up to help take this forward. ICAS are on the list to join the working group. So if you're interested in joining that group, then please let me know and I can pass that along to our policy colleagues. But as well as that, the question of whether formal consultations will need to take place will be addressed throughout the remainder of this financial year. So if there are any consultations going out to seek views, that's another way that you can offer your insights as well. So the working group and any consultations that come out are the two best ways to get involved in this work. And like I said, if you're interested in being involved in that working group, just let me know and I can pass your name along. So that's it for future developments. I'll pass back to Jane now to ask you some more questions and hear from you.
Thanks, Molly. Okay. Okay, so you've heard from us now. Hopefully have a bit more information and know a little bit more about LBTT and specifically our 3-year lease reviews. So we want to ask the same question we asked at the beginning. You obviously gave us your responses there, and hopefully after our presentation the rates will go up. So our first question we have is, how would you rate your current understanding of LBT lease review regime? Let's have a wee look and see. Should come up. Okay. Looking better this time. Yep, somewhat confident, looking definitely 52%. So yep, that's okay. Okay, I think we're sitting around about the 51% somewhat confident. So yeah, so that's good. Good to see that's gone up there. Okay. Okay, but we've got 27 responses, so we'll see if we get anyone else responding. Okay. Right, so we've got another few questions, and this is really just to gauge your interaction with LBTT, whether or not you actually do any submission yourself. You may well be leasing a property yourself, or if you do anything on behalf of. So the first question we've got is, how do you currently interact with the lease regime? Okay. So we have got a few of you who are actually on behalf of leaseholders who Okay, so yeah, probably get the highest percent who are neither doing it for themselves or for as an agent. Okay, it's just still as gauge as well. Okay, so I think the vast majority are neither for yourselves or for a leasehold. We have got some of you who actually do it. Okay. Okay, so if we can have our next question. So, have you ever submitted a lease review return? Okay, vast majority, no. Oh, got a couple who've done it again, behalf of client. Yeah, I think we're strongly coming through with not doing it. Okay, so we've got a handful of you who have done it. And yeah, have you ever advised a client? So yeah, maybe not necessarily doing a return, but had to give advice on reviews to your clients. Okay, so this one's a bit more even. Okay, okay, so we've probably got more of you not, so about 56% are saying no. But so it's a few of you who are obviously giving that advice out to your clients on leases. Yep. Okay, thank you. So that gives us just a bit of an insight of what your kind of interaction is, and if you're actually doing it on behalf of clients or giving that advice. But it looks like for the vast majority, it seems to be would be giving advice rather than actually doing these submissions. So thank you for that. Thank you for answering our poll questions. Okay, so I think I am at this point handing back over for our Q&A session.
Hi, everybody. Sorry. Yeah, before we move on to the Q&A, it'd be great if you could leave us some feedback as a rating for today's webinar. So hopefully there'll be another poll. You might be pulled out by now, but another poll appearing in your screens or in the chat box at the top of your screen. So it'd be really helpful to us if you could just give us a rating there. Certainly, I'm much better informed than I was at the beginning of the webinar, so I think you've probably achieved that, and hopefully that will come through in the feedback. Just give you another couple of minutes, or a couple of whatever. We've got maybe about a third of people replied, so we'll let you come up a wee bit more. When you're ready, Flo, you can maybe shut the poll. Thank you very much. We'll move on to some questions and answers now. We've had a couple in the chat. We also had a couple submitted beforehand. I think I actually know the answer to the first one, but I'll let the guys from Revenue Scotland do it. So just some clarity around the actual returns themselves. Our correspondent has asked, my understanding is that the first LBTT return for a new lease has to be done by a solicitor, then subsequently the tenant can self-submit. Is there scope or legislation for accountants to do returns in the future, or for the tenants to do all self-submissions, including the initial return? I'll take it back. I can probably answer half of that. So who's going to take that one?
So that will be me.
Splendid.
So yeah, so obviously, as I previously mentioned, tenants can at the moment submit an original return, but it's very rare that that happens, and at the moment it has to be done by a paper return. It is something that we are looking at doing, but through our stakeholder engagement, it's something that we found that tenants don't necessarily want to do. They normally want a tax professional or an accountant or a solicitor to submit that original return to us to ensure that it's correct and the correct amount of tax is paid. And then subsequently, they're a little more interested in doing the 3-year reviews themselves, as it can save themselves some money. And obviously, it's up to them to have to do it, as the penalty is on them if they don't. Again, accountants are allowed, like I said, to sign up as agents. I know that we've had something in the chat that says if you're not dealing with a lot of clients, or the expectation that they're not going to do a lot of returns, means that they might have that set access rejected. That is something that we are, again, like I said, currently looking at. We just need to know the scope of how many accountants, I guess, are likely to want to get set access. And therefore it is something that we can look at, and therefore they will be able to then submit all types of returns, including original returns for their clients. A lot of people in Revenue Scotland have different ideas about how many is a lot of returns that are needed. So I'm of the thought process that basically, if you are doing any sort of lease for any client, then you will have to do multiple returns, because there's likely to be 3-year reviews, and to opening it up a bit. So hopefully we can open it up a little bit more soon. So yeah, hopefully there is scope in the future to open sets up to taxpayers themselves and to more agents. It is something that we are looking at, and it is reviewed regularly.
Excellent, thank you. And the other pre-submitted question was, if a lease has been varied to extend its duration, when is the next 3-yearly review required? So say, for the sake of argument, it's extended to 5 years, when does it kick in?
So again, that's going to be me answering that one. So if the lease has already been notified to Revenue Scotland, then any variation to the lease, whether that's the rent or the term, will be taken into account at the next 3-year review. So even if the lease is submitted to us, and then 6 months after that there is a variation that extends the term of the lease, we don't need to know about it until the next 3-year review.
Cool. Somebody's actually asked, can you provide links to the electronic guidance for taxpayers? I don't know whether that's something you can do now, or maybe we could put it in the slides.
Is that the guidance for taxpayers to submit their review return online?
Yeah, I presume so.
Yep,
yeah,
I can get that.
That'd be great. There's an observation as well, probably more than a comment, that there are a few people at the smaller end of the scale who don't engage a solicitor to agree the lease, therefore the initial return doesn't come on their radar, never mind the 3-year review. If that gets picked up, it's likely to be by accountants when they're doing the accounts or whatever. So I think somebody then asked about penalties in those circumstances. So what happens if you miss? Well, you don't register the lease to start with, or if you, as a consequence of that, miss the 3-year review. Any volunteers?
Sorry, I was busy trying to find the link, so I didn't get the.
Come in. Thanks, Jeremy. I think we've actually covered that in the chat.
So you have, yes.
It's just to say, no, absolutely fine. Yeah, as is mentioned in the chat, best thing to do if you become aware that a client of yours has not submitted a review return when they should have, send them the guidance, the Revenue Scotland guidance, and encourage them to submit a return, because penalties will apply. And as Adam has mentioned, you will receive an initial late submission penalty as soon as the filing date has passed, and that's £100. And then you can receive daily penalties of £10 a day up to £900. So even if your client has not submitted a lease review return and there's no tax due, you could still be looking at £1,000 penalties for non-submission. So it's this is a lot of why we're doing the communication campaign. It's to make people aware that penalties will apply, and we want to stop that happening for people. Because if you are filing a review return and there's no tax due, it should take a matter of minutes. It doesn't have to be a particularly long process.
And somebody's asked the question about nil returns. Why do you still have to do a nil return? Is it a statistical thing? Is it to make sure that if maybe a lease changes and it comes into scope, what's the benefit of nil returns?
Well, the easy answer is we have to do it because that's what the legislation states, and that's what the Scottish government decided when they put the lease regime into practice. But yeah, as you said, quite a lot of leases tend to be extended, and therefore they can be taxable late on. So we need to know about certain leases that look like they're quite close to the tax threshold when they're first started, so that then on future 3-year reviews, it's likely that there will be tax become due.
Yeah, okay. Possibly a wee bit more technical. If a lease is inherited as part of an estate passing over from father to son on death, and the annual rental income is below 40,000, do you need to look at the value of the asset included in the lease at the date of death, or would this be exempt, not notifiable, and out with the 3-year lease requirements? That's a seriously technical question, that is.
So based on my understanding of what the question is, if the lease is passed on, then the lease terms would be the same as what they were under the original agreement. So all that would be required there is that there would be an assignation from the father to the son, just basically a change of ownership of that lease. But if the terms of the lease, the rent and the length of the lease hadn't changed, then there wouldn't be any additional tax due at that point.
Okay, no, thank you. There was a question in about the penalty notice system, and it's been answered in there, but just to say that it has been updated recently. So hopefully the old problem of maybe clocking up penalties and then only being made aware of it when it reached 1,000 shouldn't happen now, which is excellent.
Just to expand on that, basically we have up to I think it's 2 years to issue a penalty once a return's been submitted to us. And in the past, due to staffing and other issues, it's taken us a while to get round to issuing penalties, and therefore, unfortunately, it seems like some penalties that could have been issued at the £100 mark were not issued until later on when further penalties had been. But like I said, the system has now been automated, so that shouldn't happen. As soon as the filing date has passed, if we haven't received a 3-year review return, the system should trigger a penalty notice to be generated for £100. And like I said in the chat, hopefully that will trigger the taxpayer to submit a 3-year review return before we start having to add further penalties, so that keeps the penalty amount as low as possible, because we don't want to be issuing penalties. That's why we're doing as much work as we can on trying to remind taxpayers of their obligations.
Brilliant. I see my 5-minute warnings flagging up, so maybe just 1 or 2 more questions. Are organisations who have charitable status exempt from the tax?
So depending on the lease, it may still be, the original lease may still be notifiable to us, but if they have charitable status and the property that they are leasing, they are using for charitable purposes, they are able to apply charities relief to that lease. And if they apply full relief to a lease, then they're not required to do any further returns. So they have to do the original return to us, and it has to show on that original return that charities relief has been applied. But if that is the case, then they don't need to do any further assignations, terminations, or 3 yearly reviews. If they do assign the lease to someone that doesn't have charities relief, then we would class that as the granting of a new lease for LBTT purposes.
Brilliant. That actually makes some sense.
Come in and add to that. I think the terminology's quite difficult here. So there's a difference between something being exempt and something receiving full relief. Although the outcome might be similar in that there's no tax due. If it's a relief, as Adam said, we still expect a return to show that there is a transaction that's taken place, but full relief will be claimed on the return with no tax due. Whereas if it's exempt under the legislation, we wouldn't expect a return at all. And charities fall into the relief section, which is why we do still expect an original return. For leases, if that charities relief is withdrawn to any extent, then a further return is required. But that is a separate regime. It's a Section 33 return that's required. So reliefs can get quite tricky.
But it's good to know they're there and to look a bit deeper if you come across that. So
yeah, absolutely.
I think we're nearly out of time, and I think I can safely say that I'm considerably more informed than I was at the start of the webinar. I'm not sure I can use the postage stamp quip now. So thank you, the three of you, very much indeed. If anybody has any other questions, feel free to send it in to us and we'll try and get an answer from Jane or Molly or Adam as appropriate. But for now, thank you. Just before we wrap up, I think we'll just have a look at some of the, well, first of all, the usual reminder that you can keep up to date with information and all things tax and other professional news on the ICAS website, which you can see there. And looking ahead, the events team are taking a little bit of a break over the summer with events, but that doesn't mean they're not doing anything. They've got quite a few things coming up. So on the 5th of September, we have a carbon border adjustment mechanisms and what you need to know. On the 9th and 10th of September, we have the Insolvency and Restructuring Conference, which I can highly recommend, even if you're not an insolvency practitioner. And on the 16th of September, we have Discover the Future of Accountancy, insights from UK society and our members. A couple of other things as well, Bank of England briefings in London, Glasgow and Aberdeen, always very interesting. At this time, they might be quite depressing. And finally, the highlight of our conference season is the ICAS conference this year in London, when our keynote speaker will be the astronaut Tim Peake, and he will be drawing some parallels between his experiences in space and how they can be applied to business. So you'd be all very welcome along to that. Again, that just leaves me to say thank you very much to Jane, to Molly and to Adam, and of course to you for joining us. Until the next time, thank you and goodbye.
Thanks all.
Bye.